the first of our three subjects we're going to talk about is money market fund reform. Winter's coming, everyone. October 14 of 2016 is getting near, and coincidentally, that's the same day that we'll be having our next quarterly cash briefing. As we approach October, corporate behavior may be changing rapidly as well. And Debbie Cunningham, I believe you're on the line. You and I talked about the strike time announcements, and we talked about discussing some of the floating NAV products. Maybe you'd like to start by talking about what that is and the implications for corporate treasurers.
Sure. Can you hear me okay?
Absolutely.
Okay. So, there were lots of announcements about, at the beginning of the year, about what funds would be institutional and what funds would be retail. And the implication with that is whether or not there needs to be a floating net asset value product for the prime and municipal sector, or whether it's a constant net asset value, the same dollar in, dollar out product that we've gotten used to. So for those that are institutional prime or institutional municipal and that that will be having a floating net asset value, the announcements over the course of the last several months have been centered around strike times. And ultimately what that means is you're able to process transactions, a customer is, on a purchase and a redemption basis, always on a look-forward basis to what the next calculated price is. And with a constant net asset value product, that's virtually all the time, because it's just always amortized cost priced at $1 unless there's some event. With a floating net asset value calculation, that's actually a little bit different, and there will have to be specific times during the day when the price is recalculated so that the flow of transactions from customers that have been collected, all the purchases and redemptions that have been ordered by the clients, can then flow through. So basically, this will be the fund companies, through the utilization of our custodians, accountants, and pricing vendors, actually repricing these portfolios on an intraday basis. For Federated, we've chosen two different models. We have a multi-strike model and a single strike model. The multi-strike model will have 3 times per day that the funds will be priced. We've chosen 8 a.m., noon, and 3 p.m. And so basically, if you place a transaction at 11 o'clock in an institutional floating net asset value fund that has its next strike time at noon, you will be put in a queue for pricing and clearing of that transaction upon receipt of the next strike time, that strike time starting at noon. So at noon is when all of those transactions are queued into, sort of a holding tank and waiting for the price to come back from the pricing vendor, the custodian, the accountant. That's processed each time there is a strike. Will probably take anywhere from 1.5 hours to 2.5 hours. Ultimately, that's the time frame then after that strike time. So in my example, after the noon time, when the transaction will clear, when the purchase order is actually received or when the redemption is actually sent out. So there's, a little bit more of a time delay throughout the day. There's also what's called a single strike model, and basically we've been told by many of our intermediary customers that they prefer not to have any of their customers ultimately get different prices potentially throughout the day. Now, while we think there's very little likelihood of an actual price changing throughout the day, of the NAV actually changing throughout the day, if there was some sort of an event, that certainly could happen. And as such, we have intermediaries that want just a single clearing time and a single strike price for their customers and aren't really sensitive in the context of what time of the day that is. So there's a 3 o'clock strike time then for a single price model for those customers that necessarily don't want to potentially have different prices throughout the day. I think probably the biggest thing with regard to these changes is not even necessarily the striking of the price and then the clearing of the transactions. It's essentially the backing up of the final transaction time. So ultimately in today's market with amortized cost pricing, customers are used to transacting in a money market fund on a same-day basis up until 5 p.m. for both purchases and redemptions. For the floating net asset value products, at least initially, quickly because of the time that it takes to do that calculation and the deadline for wires being that of the Fed wire system. Those funds are going to have their last purchase and redemption acceptance time on their last NAV strike of the day. And in the instance that I was talking about before, this would be at 3 o'clock. So there will be a window of time between 3 and 5 that for customers who are used to taking and utilizing late day transactions in money market funds, they're going to have to go to and if they are institutional, they're going to have to go to the government side of the equation because those latest 2 hours will only be able to be satisfied in that regard. Ultimately, we do think we'll be able to push the process. So if you think about it, we have vendors and custodians and accountants who have been used to doing this pricing process once a week historically. In the most recent times, over the last several years, they've been doing it once a day, and it's due the next day. We're now asking them to do it 3 times a day and very quickly, and their very quickly is not real quick yet. It's, like I said, anywhere from an hour and a half to 2.5 hours. Our expectation that would be that as they get used to this process and clarify it a little bit more, that time frame for dissemination will grow shorter, in which case then that 3 o'clock last time frame for the NAV strike will be able to move out. But that's months down the road, certainly not on initiation on October 14th. October 14th will show multi-strike or single-strike models with the latest in the day for institutional prime and muni funds being 3 o'clock, most likely.
Thanks, Debbie. That was a master class in that, right? I appreciate it.